Good evening, everyone. Welcome to the virtual town hall. We will start in a few minutes. Okay. Good evening, everyone. Welcome to the virtual town hall on wildfire insurance, hosted by the California Department of Insurance in collaboration with Assemblywoman Gail Pellerin. Slide, please. So just some quick housekeeping. This is recorded. Audio, video, and chat will be monitored and recorded during the session. The event is also being live streamed through Facebook. Audio and video, we do respect all participants in this that is convening today, and we want to create a safe space for all. By default, all participants will be muted and video is disabled. Videos will be on for speakers only. Slide. Today's agenda, we will have Assemblywoman Pellerin with opening welcoming remarks, as well as the moderator, Cal Fire State Fire Marshal Daniel Berlant, giving us wildfire update and disaster preparedness. Director Amy Bach of United Policyholders with the Roadmap to Preparedness program, and then followed by President Rex Frazier from the Personal Insurance Federation of California on homeowners insurance changes in California. Lastly, California Department of Insurance Deputy Commissioner Julio Juarez on the sustainable insurance strategy. And we will close with Q&A and closing remarks from the Assemblywoman. And without further ado, allow me to introduce Assemblywoman Gail Pellerin.
Good evening, and thank you, Richie, for the introduction. I'm honored to represent the 28th Assembly District, which includes portions of Santa Cruz and Santa Clara counties. I want to thank my district director, Maureen McCarty, for organizing this virtual town hall tonight. And I appreciate everyone setting aside your time to engage in this critical conversation. It's incredible to see the number of participants tonight. It's a testament to the gravity of our discussion. I've heard directly from many of you about skyrocketing insurance premiums or abrupt policy cancellations. These stories underscore the urgency of today's dialogue. To provide a comprehensive perspective, we brought together a panel comprising experts from government, nonprofit, and private sectors. Together, they will offer candid insights into the steps being taken to confront and address those escalating insurance challenges we continue to experience due to the repercussions of climate change. My goal for tonight is twofold: to deepen our collective understanding of the evolving insurance landscape in California, to ensure that homeowners are aware of the avenues available to secure and retain affordable and comprehensive insurance coverage. Your voice is critical in this discussion, and thank you to those who've already submitted comments or questions. We will do our best to address those tonight. However, we may not get to all of your concerns. So if your submission is not addressed, please feel free to contact me via my website or by calling my district office. And Maureen will go ahead and post that information in chat now. And then the California Department of Insurance will also post its contact information in chat for you to submit your comments and questions directly to them. So please be aware that tonight's town hall is being recorded. In the coming days, we will share a link of this recording, which you'll find on my website. And this hour will go by quickly. I've already had 5 pieces of Halloween candy, so I am ready to go. And Richie has introduced our panel. So let's begin this important conversation. And once again, thank you all for being a part of it. So kicking it off, I'd like to introduce our State Fire Marshal, Daniel Berlant.
Great. Well, first, thank you, Assembly Member, and thank you to the Department of Insurance for inviting us to discuss California's work towards wildfire preparedness. And really, I've got to mention that even with the date being November 1st, and even though it's starting to feel like fall, the weather is cooler, some areas have seen rain. Please don't let that fool you. In fact, most of the destructive wildfires that have occurred in our state occur during this time of year. And so we cannot let our guard down just yet. But I want to talk a little bit tonight about the work that California has been doing to address our wildfire problem. In reality, in less than a decade, California has experienced some of its largest, its most destructive, and even its deadliest wildfires. And while our dry Mediterranean climate here in California has always lent itself naturally to wildfires, really a more recent confluence of issues, complex issues, have led to an immense wildfire crisis. Despite those complexities, though, and despite the challenges, we have a strong strategy here in California. We've made major investments in our state's response capabilities, increasing the number of firefighters, the amount of equipment that CAL FIRE has to respond to wildfires. We have over 12,000 firefighters now in our department to battle these wildfires. The aircraft, the fire engines, the bulldozers, the firefighters, that's just CAL FIRE. You add in our federal firefighting partners, you add in the mutual aid from our local cities and counties and fire districts. With over 1,000 local and tribal fire departments, we have a strong, arguably the strongest wildfire response capabilities in the world. But even with this extremely strong mutual aid system, we're not going to respond our way out of this crisis. So our wildfire resilience strategy is focused on three core areas. First, parcel level mitigations. And this is an important one that we'll talk about tonight, because for you as homeowners, this is where we need you and your help. Parcel level mitigation include defensible space, clearing dead or dying vegetation in and around your home. Building and retrofitting homes with ember and ignition resistant materials. And I'm going to dive into these two with the small amount of time I have, with a few more tips for you. But the second core area that we're focused on is our community hardening. Our land use planning, design standards for new neighborhoods, building fuel breaks in and around communities, reducing overgrown vegetation near roadways in our evacuation route. And then the third area of our resilience strategy is our forest health, restoring at landscape level our ecosystems, removing the overcrowding in our forests, putting prescribed fire back onto the ground. But it's really important that we note there's not one solution. It's not a silver bullet. It's an all of the approach. We have to do all of these things in order for us to bring the change that we need. Now, in the wake of the wildfires in 2018, 2020, and 2021, California has made unprecedented investment in wildfire resiliency. So I thank the Assembly member, I thank the governor, because to carry out the programs that we need to do, we have surged our funding over the last several years, surged it from $200 million, which seemed like a lot of money back in 2018. We brought it up to $2.6 billion over the past several years. Now, one of those core areas that we need your help on is defensible space. And for decades, we've required homes in WUI areas, that's the wildland-urban interface areas, to remove dead or dying vegetation. We've expanded that over the years from 30 to 100 feet. But there's new science, a lot of research, like the video you are seeing here. This is from the Institute for Business and Home Safety. At their state-of-the-art ember production wind tunnel facility, they've recreated wildfire conditions. And from this research, it's led to new requirements here in California. And those requirements will enact essentially a non-flammable zone within the first 5 feet of the home. Again, if in the video that you just saw, you saw embers, and those embers in the science and in the studies we're accumulating within that first 5 feet. And so we have found from the wildfires and from this research that first 5 feet is critical, removing all flammable items, even plants, as you can see from the image the video stopped at. Even green manicured plants catch on fire, and then they spread to the home. Now, these requirements are still being worked on in regulations through the Board of Forestry and Fire Protection. They'll go into effect first for new homes and then for all other homes in wildland urban interface areas. So pay attention, that first 5 feet is critical. Since 2008, we've had some of the most stringent building codes for new homes, making sure that they're built with ignition-resistant materials, whether that be the roof, the siding, the windows. And we've constantly been incorporating the best technologies and materials and building techniques to improve that code. But for the rest of us, if our home was built after this code, which was passed in 2008, we've been really working to help set retrofits, create a low-cost retrofit list that you can find on our website to make the home improvements that you need to, again, essentially harden your home from those wildfires. And I'll quickly mention we're building and developing a pilot program with our partners at Cal OES to help vulnerable populations do this important hardening work for those who can't afford to do it or can't physically do the work. I really have to mention today we announced over $100 million of available funding for wildfire prevention work. If you go to that QR code, if you're a fire safe council, if you're representing your fire department, your city or your county, urge them, please. We want to award this money to good local projects to surge the efforts that we are doing in the wildfire space. And so whether that's creating a fuel break around your neighborhood, whether that's improving wildfire planning or wildfire education, our wildfire prevention grant program has over $100 million set aside by the legislature, by the governor, to do this important work. So we are, as of today, accepting applications for our wildfire prevention grant program. Hopefully you took that QR code really quick. I'll later drop it or I'll make sure that it's provided to the assembly member so that her office has that available for constituents who, again, are looking for funding, again, with a fire safe council, a nonprofit organization, a city, a county, another government entity organization. So as I wrap it up, I love this picture of Yosemite because to protect these beautiful places of California, but also to protect our own homes and our own communities, we have to do all of these things. We need you as homeowners to do parcel level mitigation work, your defensible space, hardening your structure. We need to build fuel breaks around your communities. We need to put more prescribed fire on the ground. We need to bring our forest to a healthier stage, and we are doing those things. We are using examples where that work is making a difference. In reality, if 2022, we learned that when we invest at scale, in wildfire resiliency, in defensible space, in forest health, that even in the face of continuing extreme climate conditions, we can see improvements. We can see changes in reducing the impact from wildfires. Before I turn it back to the assembly member, our fire year this year is not over. We may be getting towards the end of the peak of our fire year. And while we have not had a significant number, especially in the South Bay and in the Santa Cruz Mountains, as significant as 2020 brought us, the year is not over. But we know that the work that we're doing to prevent fires and prepare communities, it is working. And so we need to continue on that path. So with that, I'll turn it back to the assembly member and happy to answer any questions.
Thank you, Chief Berlant. And I'm sorry, I forgot to read your bio at the beginning, but you have an incredible history, starting with CAL FIRE in 2001 as a volunteer, and then working your way up to being appointed as our state fire marshal by Governor Newsom in 2022. So thank you so much. I do have a few questions that were submitted. One is, are tank and exterior sprinkler systems worth installing? Can you give system type, capacity, and configuration suggestions?
Yeah, so there are a lot of great products on the market. In our office, we really we set the building standard, and we do not require exterior sprinkler systems as a requirement for a number of factors. Do sprinklers work? There's been a lot of research and study that they do, but we don't yet have a standard of what that looks like. And so, and we also have not really incorporated that into our recommendations as products. There's a number of factors that someone needs to think about. The water supply, the power for these systems. When a wildfire is approaching your home, we need every drop of water we can to fight the fire. And so if you have your own water supply, okay, that's great. But if you're tapped into the water main, we need that to fight the fires. Power, you're likely going to have power shut off in your area as a wildfire approaches. So does the system have exterior power? These are some of the questions you need to think about. Again, I don't have a recommendation. Again, there are lots of examples where they work. There's a lot of examples where we don't yet have a standard that's been tested and proven. So we really leave that up to the homeowner. If you want to go above and beyond the code, it is worthy of research.
Right. Okay, another question is, how often will the CAL FIRE maps be updated?
Great question. So we've been working to update the state responsibility area. This is the third of the state that CAL FIRE protects. That is where we determine the level of fire hazard in an area. We just completed our third round of public comment. We've continued to bring new science, new data, and take public comment, which has resulted in over 100,000 of acres being changed. And we are right now reviewing that third stage, third set of public comments. I would anticipate that we will submit into regulations the state responsibility area of the map of the fire hazard ready zones later this year, and then they would go into effect early next year. We'll then be transitioning to local responsibility areas and working with cities and counties to help them map their areas of fire hazard and then go through local adoption. That is something that can be expected in the coming year. And then the question I know was about how frequently. Our goal is to keep these updated at least every 5 years. We've admittedly not done a good job of that. It's been almost 15 years since we last did it, and a lot has changed on the landscape. A lot has changed in the conditions we're experiencing. So while we are working to bring better science into a more up-to-date 2023 map, we're committed, and I'm committed, to keeping them more up-to-date, more frequently, so that we can take into account these changing climate conditions that we're experiencing more frequently.
Great. And I'm hoping that Richie can maybe post in chat a link to those maps and where to submit public comment. Is that possible? Hopefully. Okay. Okay, one more question. How or can folks create small road associations to maintain alternative evacuation routes should main roads become inaccessible?
Ooh, that's a great question. I don't know the full scope of what that process looks like. However, if you're not familiar with road associations, very similar to HOAs, or even what I'll pivot to is Firewise communities, we absolutely encourage neighbors to work together to do community scale mitigations. And so while I can't answer the question directly of how to create a road association, what I would encourage you to do is not just focus at your home and your parcel, but work together as a community. Become a Firewise community. If you're in an HOA, work together with your neighbors, because here's the deal. If your home catches on fire, and based on how close your neighbor is, if your neighbor doesn't do any work and you do all of the defensible space, you've hardened your home, you do everything right, but they don't, and you live close to them, your home is still at risk. So we have to work neighbor to neighbor to meet the resiliency that we need and to harden the community, not just our own homes.
Great. Well, thank you so much for all this insightful information. We're gonna, and thanks to everyone who submitted questions. Our next speaker, I believe Amy Bach, she got here. I see that. Yes. She has been a voice for insurance policyholders since 1984 and a practicing lawyer since 1989. She co-founded the nonprofit United Policyholders in 1991 to support insurance consumers, and leading essential programs and authoring insurance guides. She's collaborated with notable regulatory bodies. Amy's contributions have earned her awards from entities like the Florida Association for Insurance Reform and Money Magazine. So welcome, Amy.
Thank you so much, Assemblywoman. It's always good to follow Chief Berlant. We have had our arms locked along with the Department of Insurance the last many years trying to reduce as much wildfire risk as we can, and help people be able to keep their homes insured and get insurers to incentivize risk reduction, reward it. It's just great to have the partners that you've got on today's program. I'm going to share my screen and I'm going to go through briefly a PowerPoint that is just very, very basic education from our organization. And I appreciate the kind introduction and the opportunity to contribute to helping your constituents navigate the very, very challenging insurance marketplace conditions that we are facing us today. My organization has been on the ground since things started to go a little bit off track in California, which was about 2016. So we've been working with our partners and doing consumer education just like this. This is a little bit about us, but just to jump right to where this started. You heard Chief Berlant talking about how important it is for both individuals and their neighbors and communities to reduce risk. There I am way back in 2016, going on an inspection with a firefighter and a fire marshal in the East Bay to a home where the homeowner had gotten a non-renewal notice. This is back in 2016. And what they were doing was telling that homeowner, if you do this, this, and this, we will give you a piece of paper that you can use with your insurance company to get them to reverse their decision and offer you a renewal policy. So when we saw that working, we set about trying to replicate that and help build that sort of program. And there's been a tremendous amount of progress since then in programs in communities where people can get help with hardening their homes and creating defensible space. Quick ask to your constituents and those dialed in today. We have a survey that is ongoing through which we are keeping our ears to the ground and our finger on the pulse of what's happening with people's insurance. We know that in your area where folks were impacted by wildfires in the last few years, that a lot of people are being impacted because those are the areas where people are feeling the most of the renewal and premium increase crisis. So please take our survey. It'll only take you a few minutes, and we really appreciate it. So you know the current rules. If you don't, you get 75. Your insurer has to give you 75 days notice before they non-renew you. No one has the magic wand, even Commissioner Lotta, even Governor Newsom, to force an insurance company to sell you a policy if they don't want to. That's the current law, right? But they do have to be fair and they have to be consistent. So they've got to give you the notice. There is an exception. The California Fair Plan has to take you. That's our insurer of last resort. Okay, but all it is an association of a certain kind of insurance company that by law have to participate in the Fair Plan. So the Fair Plan is there, and that's our last resort. And many of you already may be in the Fair Plan. And there are some options to insuring your home through the Fair Plan. It's better than not having coverage at all, but it's a good idea, even if you find yourself with no choice but to go in the Fair Plan. First of all, find out what their options are. They offer some enhanced coverages, and then consider pairing, which we'll talk about in a few more minutes. A Fair Plan policy with another policy, a difference in conditions policy, it's called, because a Fair Plan policy doesn't protect you from lawsuits and it doesn't cover water and wind losses. Okay, some of your other rights. You have the right to find out what risk score your insurer has assigned to you, and appeal if you think that it's inaccurate. So insurers' pricing has to be approved by the Department of Insurance. It can't be excessive or unfairly discriminatory. And thanks to Commissioner Lara's team and a lot of hard work by a lot of us stakeholders, we do have a rule now in the state that your insurance company's rates have to include a discount for you if you have mitigated and if you meet some certain standards for a wildfire risk reduced home. Those standards, there's only one of those mitigation discounts that's been approved so far, the California Fair Plan. So currently, if you have done the work that Chief Berlant talked about, and you've met those standards at your home, you may qualify for up to a 15% discount on your Fair Plan policy. That's just new. That just happened a few months ago. So you may need to find, you do need to find an agent who is really familiar with the Fair Plan, who can help you with the process. These are just some of the terminology, and all this information is available free at my organization's website, uphelp.org. So this is just some of the basics, right? Start shopping right away. These days, really important to find a good agent or broker. It's a very hard in this market to find all your options on your own. Okay. If you got non-renewed, it's always worth trying to push back and see if you can get the insurer to change their mind, but don't spend too much energy on it. It can be very tricky these days. Maybe they have wrong information about your home. At least give it a shot, right? Sometimes we find that they're basing it on your home being too far from a fire hydrant. Maybe they have the information wrong and there's a closer fire hydrant. So that's the kind of thing that can help turn things around. Where can you turn for help? An independent agent or broker, that would be an agent who has a number of different companies that they might be able to place you with. That's different from what's called a captive agent. That would be somebody who only sells typically for like State Farm. They use captive agents. USAA uses captive agents, and farmers too. These days, a farmer's agent has some other options. If they can't place you with a farmer's company, some of them may be able to place you with another company. But again, the most important thing is to find an agent or broker that is on it, staying current with how the market is shifting, and is looking in the nooks and crannies to help you, not just saying, sorry, there's nothing I can do. I have to put you in the Fair Plan right away. Many people in areas where there have been wildfires are finding these days that they don't have a choice. But we encourage people to keep shopping, even if you end up in the Fair Plan, because things are shifting, not as quickly as we want them to. But with all the work that's going on that you heard Chief Berlant talk about, the grants, all the risk reduction, we are hoping, we'll be hearing from Rex Frazier a little bit, his perspective on from the insurance industry, but we are hoping that all this good work is registering with insurance companies and going to give them more confidence in addition to the sustainable strategy that Julia will be outlining for you later. 4 types of insurance companies. Ideally, you want to be with one that's admitted, that's fully licensed, regulated, their forms, their rates. If you can't get to an admitted, you can look at a non-admitted or the Fair Plan. Last choice is a lender place. That would be if you have a mortgage and you stop paying for your insurance or it lapses and you haven't replaced it, your lender will place a policy. If that happens, we really encourage you to switch as quickly as you can to either an admitted company, a non-admitted, or the Fair Plan, because forced place policies are even more expensive than the Fair Plan and they're very bare bones. Here are resources for checking on the financial strength of an insurance company you've never heard of. Another thing that's been hard for homeowners is that a lot of insurers in today's market have stopped offering payment plans. And that can be really challenging. They're asking people to pay their premiums up front. Some insurance agencies are actually offering some premium financing options. So if that's something you want to look into, you want to look for an agent or broker that's big enough to offer that kind of help. These are the qualifications that you want in an insurance agent, current on today's marketplace. A lot of agents are basically freaking out because it's just, no one's ever seen anything quite like this. So the idea is to find an agent that's gone beyond freaking out to staying informed and staying on the cutting edge of what might be out there for you. Lots of information about the Fair Plan on our website. These are some of the options you can add, as I mentioned earlier. You can add better coverage on your contents. You can add a little bit better coverage on your dwelling. Those are options that you can add to a fair plan policy to make it a little bit more robust protection for your home. Okay, I mentioned earlier something called a difference in conditions policy. It's a separate policy that would make your fair plan look a little bit more like a traditional insurance package. I'm not going to go into much detail about those DICs because for a lot of people, it's just not financially viable to pay for a fair plan policy and then pay for a separate policy. But if you are in a position to do that and you really want to be protected, this is the way to go, right? To pair a fair plan with a DIC. We still, because my organization has had 32 years of working in wildfire areas with households to help them navigate the road to recovery, we know how so many people find that they didn't have enough insurance on their dwelling, and that becomes another obstacle to recovering. So even though the market is not what we want it to be, and even though prices are high, it's still important to try to have your dwelling insured for what it would actually cost to put it back. These are the things that matter if you want to have full coverage. But again, I know for a lot of people that it feels like a luxury today, but still we encourage you, if you do have options, that you focus on asking these kind of questions. Will this policy cover the cost of rebuilding? What's excluded? And what about my home-based business equipment? Do I need to beef up my coverage for that? What discounts do you offer and how do I qualify? And then one of the strategies people are using today when prices are so high is to increase your deductible, right? I've been carrying a $5,000 deductible on my home insurance for a number of years because it really brings the cost down, and you don't really want to file small claims anyway. You kind of want to pay them out of pocket to keep your risk profile attractive to insurers to get the most options at the best price, right? You don't want to have a whole lot of claims on your record if you can avoid it. Obviously, when you have a big loss, that's when you use your insurance. Seek out a proactive agent or broker. Do as much mitigation as you can. I cannot emphasize how important it is to do that. And I'm going to share a slide in a minute to give you a link to a place to get information on how to do that. Raise your deductible, get quotes for different levels, and then reduce or eliminate buckets of coverage you can live without, such as high dollar limits on contents. You could say stuff is stuff, just make sure you've got enough to replace your essential possessions. Other structures. So like, let's say you don't have a garage or a pool or a retaining wall or a barn. If you don't have another structure, it's annoying to be paying for that. But insurers typically will automatically include coverage for that in your policy. And very often, if you say, I want to take that out to save some money, some insurers will say, we don't let you do that. But I'm hearing more and more insurers being willing to do it. So it never hurts to ask, will that bring my premium down? So just a few more points, and thank you for your attention. So reducing your risk, of course, is win-win because A, you're going to improve the chances that your home won't be damaged or destroyed. That's, of course, the most important thing. But B, it's going to help you get insurance and keep insurance, right? These are the basic steps that experts have agreed will improve your chances, right? You can get more information. I'm going to show you where in a minute. Your risk score, I talked about that. It could be your Fireline score. It could be another company. There's lots of different companies now that are giving you this, or assigning a score to you based on your risk characteristics. It's not been out in the open, but thanks to the commissioner's newer regulations, your insurance company has to tell you what your risk score is. It's like a credit score. So know your risk, know your rights, both when you apply or before a renewal, or if you get non-renewed, you can ask. what your score is, and then you have a right to appeal if you think, like I said, that they have you in too high a risk category, if they have something incorrect about your property. This is just this is about the fair plan discounts. The slides are too fancy. But there's an agent, the agent who provided us these slides, who is an example of the kind of agent. I'm not promoting a particular agent. These are just his fancy slides and they take forever. The fair plan will give you a discount, one for protecting the structure, another for protecting the immediate surroundings. Then you get these discounts can combine, and together they can add up to 15%, but it can be very hard, like I said earlier, to get these discounts on your own. It's really very important that that you get some help here, because you have to meet all the qualifications. That dwelling has to have a Class A roof, and it's got to you got to have 6 inches at the bottom between the ground of non-combustible material. I'm not going to go through all these. You have to have your vents covered with a screen, 10% for all of that to get the these slides are way too fancy. To get the discount, let's just leave it for this. You got to check all those boxes. Why does defensible space matter? You heard what Chief Berlant said, and it's hard when you're a homeowner who's doing the right thing and your neighbors aren't. It's very hard because what they do does affect you. And that's why we just, we recommend you join, if there's a fire safe council in your community or a COPE group, get involved, because they're developing the talking points to help you speak to your neighbors and convince them why it's in their best interest to join you in creating defensible space and hardening your home, right? These are the things that make it possible for firefighters to save your home, okay? There are rules to protect you that the legislature has put in place. If you live in a zip code where there's been a disaster, you have 2 years of non-renewal protection. Many of those moratoriums on non-renewals have expired, but the commissioner is always watching the the action, and wherever there's a wildfire, he will issue a non-renewal moratorium in those in the zip codes impacted. So in closing, yes, options are limited and prices are high, but you need to be prepared, not scared. So get educated on your options, seek out that proactive consumer-oriented agent, try to keep your home insured, for the dwelling insured to value, do comparisons, help your community be fire-wise or fire safe, create a home inventory. That's very easy. You take your phone, you go walk around your home and you video and you narrate as you go. Here's my bedroom set that I got from Macy's. Here's my dining room set, opening drawers. Here's my sweaters. Here's this and that, right? You just make that video and store it in a safe place, and then mitigate, as we said, take steps to harden your home. A lot of people are thinking, why am I continuing to pay these crazy premiums? And then I read all this stuff about insurers giving people a hard time. Is it worth it? And I'm here to say, as a 32-year disaster recovery professional, yes, it's worth it, because insurance money, not charitable or government aid, is the #1 source of money that helps people rebuild and recover after a disaster. The max grant you can get if you income qualify from FEMA is $41,000. So, and SBA loans are great, but they have to be repaid. So really, it's still worth it. So here's the link I want you to all go to get risk reduction help in your area, uphelp.org/wrap. This is a resource center we have created for you, the homeowner, with support from the Governor's Office of Emergency Services and all of our partners in preparedness. It will tell you what grants are available, what programs are available, what kind of help you can get to reduce your home and your community's chances of being disaster impacted, of being damaged or destroyed. I want to thank Assembly Member Pellerin. I want to remind you all Our website's there for you. We don't sell anything. We don't take money from insurance companies. We're here to give you the straight scoop in plain language as we can, translate the confusing terminology, and help you continue to protect your assets in partnership with the Department of Insurance and our friends like Chief Berlant.
Thank you, Amy. That is phenomenal amount of information, and we're putting the links in chat, and we definitely need to invite you back and spend a lot more time talking about all these amazing resources. I love the prepared, not scared. Thank you for that. Just a couple of questions. We're just to keep on time here. Big question for my district. How can CZU fire rebuild? How can fire victims rebuild affordably and insure their homes if they can indeed rebuild? And how can we prevent underinsuring?
So sorry, go ahead. I thought
that was the question. Yeah.
I'm sorry, can you read it one more time?
So we're looking at the CZU fire area. Families are struggling to rebuild, and their question is, how are they going to get those homes insured, and how do they make sure they're not underinsured?
Yeah, so I was thinking about your CZU constituents a lot while I was talking. So, I mean, I think for a lot of them right now, if they do get non-renewed, they may have trouble getting something other than the FAIR plan. But that's where the good news is. If you have rebuilt and you have rebuilt to a higher standard to the current codes, it may be easier for you. It should be easier to get those discounts. And if the sustainable strategy works as we need it to, options may be opening up in the near future. But for now, for a lot of you, try to get that dwelling number right when you insure with the FAIR plan, and at the very least, you've got your structure insured, which is really the most important thing.
Yeah, right, great. Okay, if we have time at the end, I might come back with a couple more questions for you. But for right now, we're gonna move on to our next speaker. We have Rex Frazier. He's the president of the Personal Insurance Federation of California, PIFC. He advocates for PIFC's members at the state level and offers guidance on legislative, regulatory, and legal issues. Before his current role, he was the vice president and general counsel of PIFC. And Rex also practiced law, specialized in insurance and banking, and served as deputy insurance commissioner and was a legislative staff member in the state assembly. He's a board member of the California State Fire Safe Council and part of the Climate Insurance Working Group. So welcome, Rex.
Thanks so much. Thanks for the introduction. And it was great to follow both the chief and Amy. Terrific resources. Today, I'll go through just a quick introduction of who I work for. A couple of key legal provisions that are really causing or that are really at the heart of our situation today. I promise I'll try to make it not too boring. And then I'll talk really about the changing nature of how insurers look at California wildfire, including some statistics about premium, and then go quickly into the key issues, and really end by talking about the importance of mitigation and where we've done a good job and where I don't think we're there yet, and where there's a responsibility, I think, on insurers and others to do a better job of answering these questions. So these are the companies that are members of our association, names that you would recognize, a pretty significant share of the insurance market. The three key legal provisions that are really driving the situation that we're in to today, Amy had mentioned that, first of all, an insurance company cannot just choose the price that it charges. It has to make a request with the Department of Insurance, and the Department of Insurance then goes into quite a robust analysis. This is both for rate increases and decreases. And there's a very complicated formula that includes every single aspect of an insurance rate. And so the insurance company bears the burden of demonstrating that its request is reasonable. And as Amy mentioned, the legal standard is no rate shall be inadequate, excessive, or unfairly discriminatory. So the state has a role at two ends of the spectrum. They have to make sure that companies are permitted to charge a rate sufficient to avoid insolvency, and they have to make sure that the rate is not excessive so as to be unreasonable. There is the ability of the public to participate in these rate filings. There's principally right now two groups that do that. And even if they, even if the Department of Insurance, for instance, would agree with a rate filing, these groups come in and they can state their case as to why. They disagree even with the Department of Insurance, and for filings that are 7% or more, if these groups do not agree that the Department of Insurance should approve the rate increase, they can force the Department of Insurance, even if it doesn't want to, even if it wants to approve the filing, they can force the matter into litigation, which obviously takes a very long time to get through. So that public participation can be a key factor in getting these approvals through. The last thing is the FAIR Plan. It does establish a public right to fire insurance, but I do want to emphasize for folks listening tonight, the FAIR Plan has no connection to the government. The FAIR Plan is in statute, it's called a private non-voluntary association of insurance companies. Insurance companies must join the FAIR Plan in order to be permitted to do business in California. So if no insurance company will issue an insurance policy to a homeowner, the homeowner can go to the FAIR Plan, and that risk that the individual insurance companies were not able to insure, they end up then being a guarantor of the ability of the FAIR Plan to pay that claim, because if the FAIR Plan runs out of money, it goes to the insurance companies and assesses them on a market share basis. And those insurance companies must pay out of their unreserved capital account all the money that the FAIR Plan lacks. And so this is a huge issue, which I'll get into briefly. The numbers of the situation, you can see that for a long time, homeowners insurance was a fairly boring, stable business. What this chart shows is those yellow bars show where on an industry-wide basis, was there a profit that year or not? The yellow indicates the industry as a whole lost money in that particular calendar year. The green bars indicate that in that year, the homeowners insurers made money. And then the blue line tracks the cumulative profits. So you can see back from 1991 really to 2005, the industry during that period, you can see that blue line, the industry broke even. And there was a period of very calm fire behavior in the time period where you can see all the green bars. And the insurance companies started racking up a cumulative profit that was sizable. And really about 2013, the Department of Insurance started questioning the insurance companies, saying, hey, we don't like what we're seeing here. They started telling companies they have to come in and answer a bunch of questions and potentially be forced to lower their rates. And so there was a lot of back and forth between companies in 13, 14, 15. And then, of course, by the time we get to the fires of 2017, just the fires of 2017 eliminated all the profit that companies had made from 1991 to 2016. And then obviously 2018 was another frightening year. And you can see that put the cumulative profits down to minus $10 billion over that period. 2020 was a very tough year, but 2020 and 2019 were the years when companies started to get money back from PG&E and from Edison because of the fires that they had caused. Insurance companies pay the claims, and then they go back and seek the party at fault for causing those fires. So even though particularly 2020 would have on its own produced a yellow line, it ended up being a quote profitable year just because of the money they'd gotten back from the utilities. So you can see, it says from ho-hum predictable to profitable to really climate vulnerable and uncertain, because it has really driven these results since 2017 have really driven an incredible amount of uncertainty in the insurance industry. What I do want to emphasize, because I'll brief after this slide, I'll talk about the average premium. But before doing that, carriers have started using technology in the last 10 years that have really led to a much more granular approach to how insurance companies assess risk. And what has happened is the average premium in low risk areas has actually gone down, which means the average premium in high risk areas has gone up considerably. And so when I start talking about average premium levels in a moment, I'm sure many of you watching this will say, well, that doesn't ring true to me because my premium is much higher than the average premium paid in California. What I'd like to emphasize is that folks in urban areas facing little fire risk, their premiums have been going down for a while. And that's been offset by significant premium increases in high risk areas, because when you make a filing with the Department of Insurance, you make a filing that's sort of the average, that produces an average premium, and then companies have to balance that off. As much as they go up in some areas, they have to offset it in other areas so that they maintain the permitted average. So this is the most recent information that's available from the National Association of Insurance Commissioners. What it indicates is the average premium, and again, I'm sure many people watching this, they pay more than the average premium of $1,241 in California, but that's, remember, that's offset. But the important thing is here, the states that have already felt the impact of climate change due principally to hurricane risk in the southeast, you can see where those weather changes have driven their average premiums. Florida, Louisiana, and Texas are much, much higher than California on average. The closest sort of fire impacted state, Colorado, is considerably higher average than California. And if you go all the way to the right, you can see that from the 2010 to 2020, Colorado's average premium really zoomed up from 19th in the country to 7th. California, meanwhile, during that period of time, went from the 17th most expensive in the country to the 24th. And so when you talk with carriers, they felt as if leading into these massive losses, their average premiums really hadn't increased in the 10 years prior to the 2017 fires, because the way the rules in California work, the average premium in California went up less than inflation, and that was in a low inflation environment. And so leading into 2017, carriers already felt like they were in a hole. The numbers don't lie. Our average premium had relative to the rest of the states, we were lower and lower. And so when we had the 2017 and 2018 fires, carriers immediately started digging out of that hole. The three key issues that I think our membership is advocating for relate to the rate filing review speed, the actual substantive provisions that are in the rate formula, and then FAIR Plan growth. And so I'll go through this very briefly. I'll try not to be too boring. On the rate approval side of things, there's just a tremendous number of filings in the Department of Insurance right now. And I think career staff is struggling to keep up with the workload at the Department of Insurance. You can see the number of filings that they've been able to get through have gone down. The average time to go for an approval last year ended up being on average almost a year. So, our hope is, at least in this time where, remember, there's not just homeowners insurance filings into the Department of Insurance, there's auto insurance filings in there as well. And, for auto insurance, just think about the impacts of inflation right now. The average, the CPI for auto repairs is through the roof. The CPI for used car purchases, because when you adjust a claim, you have to pay what it would take to buy a car of the same age and condition of the car that was totaled. These cost factors are through the roof because of inflation. So you've got insurers into the Department of Insurance right now trying to get auto insurance increases, homeowners insurance increases, the commercial filings. There's many filings that are 2 years or more old. So right now, everybody is coming down on the department staff. They've got a set number of analysts and actuaries. We understand the situation we're in. We hope they're able to find a triage solution that can get through these filings more quickly, because it's very difficult to run a business when it takes almost a year to change the price that companies are allowed to charge. The two key provisions where California, it's simply an outlier compared to the rest of the country, are two sets of regulations that have been around since the very early 1990s. When a company goes to the Department of Insurance to justify its rate increase, one part of it is that they have to project their future losses. You have to say, well, do we anticipate our losses going up or down? If we anticipate they go up, then the Department of Insurance would grant an increase, and obviously the opposite is true is if you're projecting down. California is the only state in the country that says you have to project your future losses based upon your average losses over the last 20 years. We don't understand, with the impact of climate change, why that makes any sense, why your loss projections would be based on data from 20 years ago. And so we're seeking the authority to use a system that allows companies to project their losses looking forward based upon where the homes are located and the condition of those homes. Again, California is the only state where we don't allow this for homeowners, but interestingly, we already allow it for earthquake insurers. Not surprisingly, you project your losses based on your home's proximity to a fault. So we already allow that for earthquake insurers. We don't allow it for homeowners insurers. We think it's a very valid predictor of what your losses are going to be, is where the homes are located to fuel. Similarly, there's a thing called reinsurance, which is insurance companies don't have enough money in their own accounts to insure all Californians. So what they do is they take part of the business that they write here in California and they sell it around the globe. And when they'll pay a premium to an insurance company, typically outside of California, and then that reduces the risk that the insurance company has on its books. And the reason why that's important is because insurers are only allowed to sell a certain amount of insurance relative to how much capital they hold. You wouldn't want to let a company just make all these promises by selling all this insurance, but not have enough money to pay. And so the amount of capital they have must be analyzed relative to how much insurance they have in force. And when you sell part of the insurance you have in force, then you free up space on your balance sheet to be able to write more insurance. So without reinsurance, companies could sell 60 to 70% of what they sell now. Reinsurance is just, if you can't get enough reinsurance, you have to non-renew people. And California, just like with modeling, is the only state where we have this fiction where insurance companies cannot actually get credit in their rate filings for how much reinsurance costs they face. So if companies can't actually make a rate filing that shows their actual costs, then it's difficult for them to do business in California. Lastly, the FAIR Plan. And again, remember, the FAIR Plan is not the government. The FAIR Plan is the insurance companies. And so you can see the number of policies issued by the FAIR Plan is really on a negative track. And the reason this is important is because the FAIR Plan's liabilities are getting to the point of being scary. And all it's going to take is a major fire. For instance, here's some various examples of where the FAIR Plan has a huge amount of exposure. And
I'm sorry, it's time.
Oh, sorry about that. Point is, any one of these events could bankrupt the FAIR Plan. They turn around and ask the insurance companies for money, and there's just not simply enough money. So a decidedly negative situation. So I won't go through mitigation, but I'm happy to answer any questions. Sorry for going over.
No, and my hope is that we can get all these PowerPoints and post them on my website as well, so people can have access. The reality is we have so much information and limited time and trying to stay on schedule today. But let me throw out one question here. So how do insurers decide how much to charge based on current state law, and what changes might make insuring us more palatable?
Yeah, there's a set of regulations called the prior approval regulations. Super technical. People like me have had to learn these over 20 years of legal practice. So it's pretty grim. But every single element of a rate is specified in Department of Insurance regulations. And the insurance company has to make a filing with the Department of Insurance that then assesses whether the filing is reasonable or not. The two key elements, if companies can't actually get an approved price relative to the risk in their portfolio, then what they'll do is they'll take the riskiest properties out of their portfolio through, what Amy had talked about, whether we call it dropping or non-renewal. Companies, when they cannot get an adequate rate approved by the state to support their business in force, they will non-renew the number of homes they need to make sure that they have a permitted rate level that supports all the business in their portfolio. Because remember, an insurance contract is a promise, and they have to make sure they have enough money to pay the claims of the customers that they have.
Great. Great. Thank you so much, Rex. And I'm now honored to introduce my town hall co-host, Deputy Commissioner Julia Juarez. Deputy Commissioner Juarez was first appointed as the Director of Community Outreach for the California Department of Insurance in January 2019. In this role, she focused on community measures related to California's wildfires and engaged with affected consumers. By January 2020, she advanced to Deputy Commissioner for Community Relations and Outreach, overseeing initiatives to support wildfire survivors, local governments, and businesses. The Deputy Commissioner's previous roles include District Director for Senator Lara, Press Secretary for Speaker Emeritus Fabian Nunez, and Director for the Southern California region of the Hispanic Scholarship Fund, where she facilitated more than $2 million in scholarship funds. Welcome, Julia.
Thank you very much, Assembly Member. It is a pleasure to be here. I'm happy to be here on behalf of Commissioner Ricardo Lara, and love to help answer any questions that your constituents may have. Right now, I'm going to be discussing the California Sustainable Insurance Strategy, which is the strategy that Commissioner Lara unveiled late last month, and we are working together as a department to help modernize our insurance market. We have heard from thousands of consumers about the issues that they are having with their insurance companies and with the availability of insurance. And so the expectation is that as we are working together, we are looking to make insurance accessible and also create an insurance market that is resilient, so that we are, continuing to protect our communities from climate change. We have, as Rex was saying earlier, the Department of Insurance and Commissioner Lara have to figure out, one, to make absolutely sure that consumers are protected, that they are absolutely, not being taken advantage of. And on the other hand, you also have to make sure that the market is able to pay the claims that, that they are doing, that they are actually covering. So as Rex was talking about the global context of what is happening, I just wanted to just give a quick overview of that, we all have to remember that insurance companies are global, global organizations. They are also not, they are not utilities. They don't have to sell us insurance. They don't have to do any of that. But because they are global industries, they do have, they have all of these other things that come to them that they have to deal with. So the natural disasters that have happened, not just in California, but throughout the country and throughout the world, have just been unprecedented and have just caused just an incredible stress on the financial market. So also, the cost of rebuilding has just increased tremendously. We have seen that the supply chain, during the pandemic, the supply chain was, disrupted, and it was a major issue. And so because of all of that, everything has just become a lot more expensive for them to cover anything that they've had to cover. So as Rex was mentioning in regards to reinsurance, reinsurance is basically insurance that insurance companies buy themselves to make sure that they're able to cover their claims. And that, of course, has gone very, very, very high for them. And so that has been an incredible loss for them because of all of the catastrophes that have happened throughout the world. And so as the risk grows, the market has to figure out ways to protect itself, make sure that they're able to cover their losses and be able to make sure that everyone is able to file their claims. So because of that, they have stopped. There's several companies have stopped, selling new policies, and so because of that, we have seen that all of these increases in non-renewals have happened throughout the state. So what does that mean for California? California has the top 12 companies in California actually are responsible for 85% of the state's homeowners market. So that means that if, basically 7 of those 12 companies have paused or restricted their new business in the state because of all of this risk that they have in the state. Now, what I will show you next is this listing of all of these companies. If you can see here, you will see that even though all of these companies have a very large market share within the state, they have also had a lot of rate increases that are either pending or have been approved. And these are pretty large numbers that you're looking at. However, if you look at the right-hand side, you will see that a lot of these have paused new policies or limited their new policies because of the actual, the amount of risk that they have. Normally, companies are able to do this, and they do this, and normally it's no big deal. However, because this is such a large problem throughout the industry, the entire industry is going through this. They are, we have 7 of the 12 that are actually either paused or limited their policies. Again, so that's why you are seeing all the different changes that are happening, and in some areas you see a lot less movement than others. So what does that mean for California? Rex was showing us an interesting, something earlier too, in regards to their loss ratios. So according to the National Association of Insurance Commissioners, that they release this profitability report every year. And so this year in January, they released this, and it shows that from 2012 to 2021, which shows the last 10 years, we have seen that California has incurred a loss ratio of 73.9, and their underwriting profit has actually been a minus 13.1, and the direct profit of insurance transactions has been a minus 6.1, and direct return on net worth is 0.8%. What does this mean? So just so you know, California has the largest insurance market in the entire country. That means that if everybody wants to do business in California, everybody's doing business in California. We have over 115 insurance companies that are offering homeowners insurance, but most people will go to these 12 insurance companies. But all of that has been, even within those 115 that are still writing policies, there have been losses to the industry as a whole. So, how did we get here? The FAIR Plan, as Russ mentioned, it is not a government agency. It was created by the legislature after the Watts riots in the 60s because no one wanted to insure the area of South Los Angeles during that time. And so this was created, and it's a pool that all insurance companies basically, depending on their market share, they put some money into that. And so that's how this is actually, the FAIR Plan is actually able to cover their bills. However, right now in some areas, and in your area, I'm sure there are some particular areas where this has become, rather the insurer of last resort, it has been the only insurance that is available for many people. The other part of that is that if, once we have the top 12 companies, we have seen that they have also been downgraded for their outlooks because of their risk concentration here in California. And so insurance companies are very much so trying to do everything they can to make sure that they are covering the risk, that they are limiting the amount of risk that they have. And that is why we're seeing that so many of them are no longer writing in particular areas of the state. And so then, of course, rate filings, as you heard, are very complex, a lot more complex now, and they are taking longer to take care of. And of course, we also have because of Prop 103, we also have an organization that could potentially prolong the rate filing, up to 2 years. So those are the major issues that we have. So Commissioner Lara introduced the California Sustainable Insurance Strategy, which is basically is something that he is doing through his authority, requiring insurance companies that they will be writing 85% of homes and businesses in those areas where we have the most amount of people either on the FAIR Plan or where we don't have availability of insurance. So that is going to be, that is something that we are identifying what those areas are and where those companies are going to be writing. We are also, along with that, the expectation is that people will be able to get out of the FAIR Plan and into the regular market. Now, that being said, the first priority is going to be for those homes and those businesses that have done their best to, reduce their wildfire risk. And so the Safer from Wildfires framework, which I will talk about a little bit later, gives you very specific things that you can do to make sure that your home is safer from wildfires. And so that is exactly what we're looking at to make sure that you're able to get out of the FAIR Plan and into a policy that is in the regular market. Then the other thing that the commissioner is going to that is working on, and we have held several hearings on already, and are continuing to talk to experts and understanding how these things work, is the catastrophic modeling. As you heard, California in the past had basically just looked at what historical losses have happened to be able to figure out what the premiums are. However, because of climate change, because of all the different types of catastrophes that we have seen in the wildfires, that has just changed dramatically. And because of the Safer from Wildfires framework that we are looking at, we're now looking at figuring out how can we look at an area and then be a little bit more specific on what we're looking at, so that you can be priced appropriately, so that those discounts that you should be getting because you have been mitigating your home would be based out of the mitigation that you're doing here. So that is why that is something that the commissioner is working on, and then the other part of that is we are working on modernizing the FAIR Plan. And so what that is right now, as of when Commissioner Lara came on board in 2019, And he was actually working with, we went throughout the state to talk to consumers, and we found that the FAIR Plan was only able to sell insurance for $1.5 million for a home and for $3 million for a business. And so that was not enough. So Commissioner Lara asked them to double that. So then that became $3 million for a home and $7 million for a business. Now, the other thing that Commissioner Lara had requested was that rather than people having to go and buy another policy, difference in conditions policy, for the FAIR Plan to then just provide an insurance policy that is, that is for the entire home, a full HO3 policy is what that would be called. The FAIR Plan decided to sue the commissioner because they did not feel like that the commissioner had the authority to do that. And although the commissioner has won in every case, the FAIR Plan continues to appeal that. So we are still in litigation on that. And ultimately, the reason is because the FAIR Plan believes that if they offered a full HO3 policy, that it would be competing against the insurance companies. However, that, we are still in litigation, and that continues. So in order for us to move forward, we worked with the FAIR Plan to try to find a solution for the issues that we're having. We heard from the homeowners associations. They told us that even though they worked together to make sure that their homes were mitigated and all of that, they were still being dropped, and they needed more insurance coverage than what the FAIR Plan offered, is $7 million. So as of today, November 1st, the FAIR Plan is actually offering $20 million per property for the entire property. So now the commissioner is looking into, with the sustainable insurance strategy, the request from the FAIR Plan is for it to be $20 million per structure, because that $20 million for the whole property is not enough for many HOAs. And so we are looking at increasing that to $20 million per structure. So these are the major things that the California Sustainable Insurance Strategy is. This is the largest insurance reform since voters passed Prop 103. And it is very much so based out of more than 1,800 meetings, town halls, events that we have had in every single county in the state. The commissioner has made sure that we heard from as many people as possible to understand exactly what was happening and how can we help to make the market better, to make a difference in what we're doing. So along with that, the commissioner did work on the Safer from Wildfires regulation, which is basically making sure that all communities have standards on what it is that we all need to do to make sure that our homes are mitigated. The commissioner brought all of the agencies that dealt with wildfires, because sometimes you heard from your city that they had some standards, so other times the county, other times CAL FIRE, maybe Department of Forestry. Everybody had just different standards of what was a mitigated home. So what this did is bring everyone together to put together a very specific list of things that you can do in your home to make sure that you are as safe as you possibly can be from wildfires. And so with that, it includes a discount, so that insurance companies, now it is part of the law, the regulation, it is part of the law that insurance company must take into account everything that you have done to mitigate your home when they're looking at your rates. And so you will be able to get your discount there. Along with that, the commissioner expanded the FAIR Plan so that the coverage, it wasn't just general insurance, but also was working for the agro businesses, the outdoor recreational businesses that did not have coverage before. And then, of course, we helped to modernize the FAIR Plan, making sure that they were able to receive payments through credit cards. In the past, you had to basically write a check and send it to the FAIR Plan with your with either the entirety of your premium, and people just did not, right now, the expense for insurance is so much higher that it was impossible for folks to take that. So that's where that came from. And then we, of course, the commissioner continues to work on the with the climate and sustainability branch, making sure that we are trying to be on top of what we do, on top of climate change, and make sure that homes are protected. So the Safer from Wildfires framework is protecting your home, your immediate surroundings, and then protecting your entire community. That means, and we will share this with you after this, but very specific things here in your home or business. See, there's 6 very specific things that you can do in your surrounding areas, very specific things that you can do as well. And then your entire community, making sure that if you are a part of a FireWise USA community, or cities or counties or local districts are a part of a fire risk reduction community, that you are looking out for each other, and that all of you are working together to make sure that you're safer from wildfires, that you get a discount for the work that you're doing there too. You can find information in our website. We have the top 10 tips for finding residential insurance that we will share also in the chat, but you can find that there. We also have a home insurance finder tool that you can see. And if you need to speak to someone, if you file a complaint, you can file a complaint with the department. We have people there during business hours who can talk to you about any type of insurance issue, whatever issue that you may be having, any type of question that you have. We have experts on the line who are there, available to talk with you, available to walk you through your policy, line by line, to tell you exactly what is going on, what types of questions that you may have, or even tell you what types of questions you should ask. Or if your insurance company has dropped you or anything like that, that you have questions, we are happy to help you. When one of the things with the Safer from Wildfires framework as well is now insurance companies must also tell you what your fire risk score is and how they came about getting that. And if you don't agree with that fire risk score, you can come back to the insurance company and appeal that. And we can, and if you don't, you're having a hard time working with your insurance company on that, you can give us a call and we can work with you and help you with that. So we are happy to be there for you always, and we are ready for questions. I know that,
Yeah, yeah. Hi, thank you so much. I really appreciate this. And we're all anxiously awaiting to see how these regulation updates will impact the insurance landscape in California. One thing I'm curious about, have the insurers agreed to the 85% commitment?
Yes, and so this was actually something that the governor, the commissioner, the leaders of the Senate and the Assembly insurance committees got together and worked out with the insurance companies and said, if we have this 85, you have to cover this. We will work with you to try to find solutions to this, to what they're asking for. And so as you saw Rex talking about earlier about the catastrophic modeling in reinsurance, we are working to make sure that if this is something that we can do, like that we have the ability to know exactly how this works and how we can make sure that consumers are protected through it, that they are not going to be discriminated against because of it. For reinsurance, we're also looking into that and seeing if that is a possibility, that we will actually be able to allow you to charge reinsurance rates, that we are only looking at California risk, that we are not paying for the risk that is happening in Texas or India or anywhere else, because these reinsurance companies are global companies as well. And we want to make absolutely sure that if there is risk that we are covering, that we're going to, that consumers are going to be paying for, that is also only California risk. And all of this, and by the way, also, there's just so much that I want to share. But one more thing that I wanted to make sure that you're aware of as well is, Rex mentioned that, the department has just a lot of work to do. And so I also want to let your constituents know that, the governor understanding the issue as well, he did an executive order ensuring that the Department of Insurance gets the funding and the people that it needs to be able to move these rate reviews much faster. And so we're working on that as well. So that is why it was a full team effort. This is something that the commissioner has been working on for a while, and we are expecting that insurance companies do follow through with what they said that they're doing, because we are working with them to make sure that they are also that they are also able to do their claims.
And there is a situation like if someone does have a 0 risk score and they still get a non-renewal, and then they file a complaint, how soon should there be a response to that complaint?
So when you file a complaint with the department, we will walk you through it, and so that we know that you understand what is happening and all of that. Insurance companies have 21 days to respond to the department with a resolution for the issue. And so we work with you through that entire time to make sure that that we find a resolution with you.
Yeah, I mean, I didn't have that experience when I called, unfortunately. I did file a complaint on a situation I had back in August and hadn't heard anything yet, and it's still reviewing in process. So maybe we could talk offline. I mean, but I know my constituents are really concerned. They are getting non-renewal notices. They're getting a real difficult time trying to get their homes insured. And this has been extraordinary information, super, super helpful. But there's so much more we need to do, I think, to make the system more responsive to our constituents. So I want to thank you, Deputy Commissioner Juarez, and please thank Commissioner Lara for the steps that his office is taking to alleviate this homeowners insurance crisis in a meaningful and impactful way. I'm grateful for the work that's been done already. And as we've all said, there's much more work to do ahead. I want to extend a special thanks to all of our panelists. Your specialized knowledge and the work you're doing will guide us through these changing times and help to create a more sustainable homeowners insurance landscape for our future. A big thank you to everyone who participated tonight. And we've lost a lot of folks, but I know it's hard to stay engaged for the whole time, but I'm really grateful for those who are still on, for your patience and engagement. We put a lot of information in chat, and we'll be putting more information on our website. And this is not the end. This is the beginning of conversations that we're going to continue to have. My team will work diligently to review all the feedback and strive to address as many questions as possible in the days ahead. So this dialogue is essential and will undoubtedly continue. Please remain engaged with my office as we navigate and address the evolving challenges of homeowners insurance. So with that, I think we're just minutes away from our ending time of 7 p.m. Is there anyone else on the panel who has any other comments to make? Everyone's done for the night. Okay, well,
I just want to say thank you, Assemblywoman. It's really you got all the players here that are on top of the situation. So thank you.
Yes, absolutely. So thank you all again and have a great evening.
Thank you.